General Motors is filing for an initial public offering that could be the second biggest ever in the U.S., depending on how it plays out. Right now, we are joined by Jeremy Anwyl. He's the CEO of Edmunds.com, a one-stop website where you can buy, sell, and review autos. Everybody knows what this website is. Jeremy, good to have you back with us. We all know, of course.
Thanks.
Listen, we did talk with Steve Ratner, the former car czar. He said it would have been better, a GM IPO would have been better with more quarterly profits, maybe if we had a little bit more time. Do you agree?
Yeah, I do. Not only that, I think right now the direction of the car market in general is just not really clear. August looks like it's up a little bit over July, but I think the rest of the year is going to be kind of weak. So there's a lot of questions about the car industry that are completely separate from GM, but they've got to be putting some storm clouds, I think, over the prospect of an IPO. So maybe next year would have been better.
You know, we were talking to Steve Ratner, former car czar, a little bit earlier, and he said one of the things that he wants to see is for GM to lower costs more or to be able to boost margins in a better way to catch up with Ford. He said there's no reason they shouldn't be at the same level as Ford. Do you agree, and do you know what the problem is?
Well, I think they, through the bankruptcy, they actually arguably have a lower cost structure now than Ford actually does, because the bankruptcy was quite remarkable in terms of what it was able to accomplish. In terms of raising margins, that's really about new product, and Ford, I think, is a little further along in terms of introducing some really hot cars. GM's got some good cars in the market. They've got some key product launches coming up, and if they're successful, I think we'll see their margins start to increase as well.
We've been talking about Ford cars now averaging above $30,000 a piece. I mean, is this something that GM needs to aim for? Is it about pricing?
Well, I think that's a big part of it. One of the things that Ford has done a really nice job of is bringing out cars that have a lot more features that people are willing to pay for, particularly in the area of technology. They have this platform called Sync, and it really resonates particularly with younger buyers. People are willing to pay for it. GM doesn't have anything really comparable yet. They've got pieces of it, but not the whole package. And it's interesting, I think, that people are willing to pay some substantial money when they're buying a vehicle for features that may not be exactly what we think about when we think of cars. Things like iPod connectivity, satellite radio, voice-activated dialing. So there's a lot of room for technology to really catch up on cars and really be current with what people are thinking about when they think of their normal devices. And if GM can catch up with Ford, I think that would be a good thing.
Jeremy, what do you think is the biggest risk to the GM story at this point?
I think the timing is really the key thing. I mean, there's a lot of questions about the IPO. They filed today, but there's a lot of sort of TBDs or blanks to be filled in. The risk really, I think, is around the timing, because we don't know the direction of the stock market. It seems to be up and down. The car market might be trending down a little bit between now and the end of the year. So I did notice that it seems like the IPO is actually going to be held in November, and it's interesting to me that that's after the election. So this way maybe it's sort of the best of both worlds. On the one hand, you can say that the IPO papers have been filed, but you're putting off any risk of the IPO fizzling in any way till after the election. Maybe that's just me being cynical. I don't know.
No, I actually think it's a pretty interesting observation.
It is very interesting. Let me ask you about the trust factor, because there was a time when the president was having to go out and say, you can buy these cars. We guarantee we are back. The federal government's backing the warranty. And there was a time when maybe consumers didn't trust these car makers because there was obviously concern about the future. Is that fully restored? Is it fully back?
Well, the issue was that the so-called experts in the auto industry were all saying that no consumers are going to buy a car from a bankrupt car company because they don't know if the company's going to be around. And that's why the administration kind of stepped up and really was dealing with that head on. What we found, though, is that consumers actually like to buy cars from bankrupt car companies because they think that the deals are really good, and that for both Chrysler and GM, sales went up when they were in bankruptcy, and nobody expected that.
You know, the other thing Steve Ratner brought up, Jeremy, is that, he worked very closely with these guys. I mean, for such a long time, their product offerings, they just weren't what consumers want. He feels at this point they get it inside General Motors. They've got a new CEO coming in. Mr. Whitaker is going to be out. Ackerson's coming in. Is Ackerson, in your view, the right guy to make sure that that product mix is spot on with consumers?
Well, I haven't met him. I think the key is that he has to allow what really Bob Lutz started many, many years ago now continue. And what I mean by that is that the vehicles that GM is bringing out into the marketplace today are actually pretty competitive. And that's taken a long time to kind of get right. They have a really good track record now with car launch after car launch. They haven't had a real dud in a long, long time. So they've just got to keep that going. And in a way, I think the new CEO just kind of needs to step back and let what's happening happen.
All right, we're going to leave it there. Hey, Jeremy, thank you so much. Jeremy Anwyl, the CEO of Edmunds.com.